Bask Bank's certificate of deposit is designed for those who want guaranteed growth on their savings without having to constantly check changing rates or worry about moving funds from one account to another. What stands out right away is the variety of term lengths on offer, with APYs that beat the national average. For example, a 3-month CD gives you a 4.35% APY, and even the classic 12-month CD offers a strong 4.30% APY. Whether the plan is to tuck away money for just a few months or let it sit for 2 years, there's a term available to match most people's timelines and needs. The core appeal is pretty simple: deposit a lump sum, at least $1,000, and pick a term that lines up with savings goals. From there, the rate is locked in, which means the roller coaster of rising and falling interest rates won't impact earnings during the term. That sense of predictability can be a real relief, especially in an economy where rate changes seem to come out of nowhere. And with interest compounded over the life of the CD, the final payout is clear from the start. There are no surprise deductions or confusing calculations to keep track of. Users also avoid the annoyance of monthly fees and minimum balance requirements beyond the initial deposit. So all the money deposited is working to earn more rather than getting chipped away by charges. FDIC insurance adds an important safety net, which is crucial for those wanting peace of mind that funds are protected up to federal limits. On the convenience front, the account is easy to open online, typically in about 15 minutes. After opening, simply make sure the account is funded within 10 business days, otherwise it will be closed. And those wanting truly set it and forget it savings can rest easy, knowing the account does everything in the background. But as appealing as those returns and safety nets are, CDs are definitely not for everyone. The biggest downside is the lack of immediate access to funds. Once the money is in the CD, it's locked for the chosen term, and early withdrawals mean paying a penalty. This can cut into both earnings and even the original deposit if funds are pulled out too early. It means CDs work best for money that's truly not needed until the term is up, the kind of cash set aside for a future expense or goal. Another thing to remember is that after the CD matures, if no action is taken, it may roll over at the current rate available at that time, which could be higher or lower than what was initially locked in, depending on the interest rate environment. In summary, Bask Bank CD provides a strong, predictable return, especially compared to many traditional banks, and is built for savers who want reliability and don't need immediate access to their funds. With a simple no-fee structure and FDIC protection, it checks a lot of boxes for those seeking zero-stress, low-maintenance savings growth. Still, the inflexibility of tying up funds means it's not well suited to money that might be needed unexpectedly. Those weighing this account should take a careful look at their short-term liquidity needs before deciding to lock in a rate, making sure that the timing and amount align well with their actual plans. Otherwise, the penalty risk could outweigh the guaranteed return.